All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got another update on TLT right here. TLT just absolutely skyrocketing to the upside, almost filling that gap up here right around $100. Basically filled it, just a little bit of room left to run. TNX absolutely tanking. Okay, we've seen a huge downtrend start here in TNX, and we came right down to that 3.92, 3.93 area. And you can see we're starting to dance around there on the daily candles. All right, we're also going to talk about the S&P 500. Okay, we came up to that expected 462 target area, and then we really just blasted off here recently. So we got to break down the market and really go over a lot of the data behind this move. Okay, so many people just think that the market is behaving irrationally, but they're not actually looking at any of the data behind the market. So we're going to dive into that and go over many of the useful data that supported this bullish theory. And basically, I've been calling it the melt up, all right, since we've been over here in this period, suggesting that we are going to continue melting up towards the end of the year. And it appears that's what we've definitely been doing. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free trade ideas, all right? And this is what they'll look like, highlighting the conditions on the chart, going over the chart itself, showing it to you guys, and just look at the last three trade ideas, right? We have Teladoc, one of the most recent ones. It went up over 14.5% since the time of that recording. We have, or since the time of the newsletter was put out, we have PayPal ran up over 10% since the time the newsletter was put out. And Rivian ran up an astounding 40% since the newsletter was put out. So the newsletter is really amazing, guys, and it's completely free. You can get those sent to your inbox every single week. All right, giving out free trade ideas and free valuable finance content. Now, if you guys want, you can also sign up for the Discord, okay? We have the Investment Intelligence Discord where you get access to all of the different trade ideas, all of the different analysis, indicators, custom scripts, many, many more things, okay? You can see that the plays, Teladoc was in there. That was over 100%. Rivian is up also, went up over 100% on the options. PayPal is in here too. You can see over 50% on the options. So many, many good trades and trade ideas inside of the Discord. And that's where you get all the analysis, or you can just simply join the newsletter and get those completely free to your inbox once or twice a week. All right, now let's go ahead and get into it. And let's talk about ARK. Okay, so ARKK, all right, sees its best month versus the NASDAQ 100 ever. Okay, so this is basically a ratio right here that we're looking at. And it basically outperformed the NASDAQ tremendously, right? And we've seen, a lot of the Magnificent Seven stocks kind of cool off a little bit, okay? It's not like they've started some significant downtrend, but we're seeing a lot of other names in the market have these huge days going up 8% in one day, 7%, 10% in one day. And a lot of those have actually been ARKK stocks. Now, we also saw a dramatic drop in the AAII Bear Index. Okay, and that was another thing that was pretty important here recently. Short sellers have been under massive pressure, over $6 billion in year-to-date mark-to-market losses. And this is in crypto short sellers, okay? So when you think about that, a lot of people have been squeezed out, okay? And we've been seeing not only this tremendous rally in some of the crypto stocks like Coinbase, Mara, Riot, just to name a couple, but you've also seen a lot of shorts get squeezed out of there, really fueling that fire. And when you take a look at the multi-asset risk indicator, okay, the current levels that it was at indicated that we're heading more towards risk on, and we weren't at levels that were extremely, basically too frothy, right? Too high, too elevated in the risk on level. We're seeing levels at a very comfortable area. The latest level, when we were looking at these over the past week, it was at 0.7, right? And so that's continued to rise now as the markets rallied. But that's another thing that really has driven the rally. And when you take a look here, I mean, the international market has just been absolutely insane. So below we have 4 examples of international indices hitting new all-time highs, right? We have the DAX in Germany, we have Brazil, we have India, and we have Poland, all of these making new all-time highs. Okay, we saw the Dow Jones making new all-time highs. The S&P is very, very close to making all-time highs. So it's not like this is some, magical thing that's just happening out of nowhere. And a lot of people were saying it was on the only Magnificent Seven stocks. We've seen a huge market breadth thrust where we're seeing tons of other stocks besides the Magnificent Seven really rally. The equal weight index has also rallied very hard. And so we're just seeing overall very good breadth. And that's what we've continued to see over the past week. And we're seeing that internationally as well. Now, margins have not collapsed despite macro pressures. All right, this is from BMO, all right, Bank of Montreal. We have EPS being stable while expectations have improved. So again, these are some of the underlying factors that really drove this rally over the past week. Right. When you take a look at this here as well, we have the U.S. 10-year Treasury yield. It's broken firmly above its 3-year moving average yield this year. And so when you take a look at this, above average yields are not necessarily a stock market hindrance, regardless of the direction. Okay, so when you look at the average rolling 1-year price performance based on US 10-year constant maturity Treasury yield level and direction, the monthly data from 1979 suggests that we get an average return of 8.3% when it's rising. And then 10.4% right here when it's falling. So either way, it's still overall a general positive thing for stock markets and not necessarily a stock market hindrance. Now, presidential election years, they tend to have lower average market performance, but re-election years are much better. Okay, so coming into 2024, this is one thing you want to keep in mind. And I've been a very, very big fan of the election year seasonality and cycle really ever since it kind of predicted the stock market bottom in October of 2022. I've been paying a lot more attention to it and keeping you guys updated on it. So 2024 may not be the best performing year, but that doesn't mean that it has to be necessarily negative. Now, market performance is significantly above average when a Democratic president is seeking re-election. So that will be really interesting when you take into factor some of the, presidential, election cycles right here. We do have Joe Biden running again, so he is seeking re-election right now. And, as it goes right here, it says re-election years are much better than just your average presidential election year where you don't have a president coming up for re-election. Now, stocks log lower gains in the second year of bull markets. So, if you take a look in the bull market start date, and then you take a look at the year 1 price change, which is going to be the dark blue line here, right? It's about a 38% return on average. Now, the year 2 price change is about 11% on average. So when you take into fact year 2 of a bull market, okay, it also suggests that, hey, the rally may not necessarily be as strong, but that doesn't mean that it has to be bad necessarily. You combine that with a little bit of the election years data that says, hey, the election years aren't really necessarily the strongest, but it doesn't have to be necessarily a bad year for the market. Now, big moves are also less common in the second year of bull markets. So the S&P 500 percentage of days with a daily price change of 1% up or down or greater in years 1 or in 2 of the bull market. Year 1 is about a 26%, and then year 2 is going to be about a 15.8%. So again, big moves are less common in the second year of bull markets. Value tends to outperform the following value tends to outperform following the end of rate hikes. So that's a big thing that we could be at right now. I mean, the stock market really, really rallied because Jerome Powell essentially signaled that he's done and he has ended rate hikes. I mean, that's pretty much what came through. And I know a lot of people are saying, no, he can still raise rates. But if you listen to what he was saying, he basically signaled that, hey, we did the last rate hike. Okay. And we're not looking to really rate hike anymore. And now the big question and the big thing that the market is trying to price and figure out is really going to be, when do rate cuts start? But when you take a look at Russell 1000 value in dark blue versus Russell 1000 growth in light blue, okay, 12 months out, value outperforms growth by a significant amount right here. Okay. And so that's something to think about heading into the future and, really looking at, all right, well, what are some of the plays that maybe I want to look into, for this official, end of the rate hike cycle, and what are some of the plays that could really benefit from that? You can see, growth outperforming in the initial period, right? In the initial first 3 months. Okay. But then after that, 6 months, 9 months, and 12 months out later, you see value really is the one that's outperforming growth. Now, 2023 is on track to be the best year ever for the largest stocks. So absolutely amazing. And, being that, the S&P 500 is market cap weighted, it's no surprise that the S&P 500 has had a really amazing year as well. Now, the S&P 500 can still perform when large stock leadership fades. So everyone's saying that, hey, the Magnificent Seven, the rally is just not going to be sustainable, and we're not going to be able to see tremendous gains in those stocks like we did this year. That doesn't mean that the S&P 500 can't still perform well. If you take a look here, the average performance is about 14.3%. Subsequent following peaks in the year-over-year relative performance of the 10 largest S&P 500 stocks. Now, these are the S&P 500 2024 year-end forecasts. Okay, now most of these are bullish, right? You have Deutsche Bank, BMO, RBC, Bank of America, all at 5,000 or above. You have Goldman Sachs, 4,700, Morgan Stanley, and JP Morgan coming in below 4,700 at 45 and 4,200. Now, this is the percentage of S&P 500 stocks at 20-day new highs. So this is basically another form of market breadth. And if we were to take a look at this and just take a look whenever there is a 20-day breadth thrust, right, the median returns, well, let's just look at the average gain. Okay, the average gain 3 months out is going to be 7%. Okay, that average gain 6 months out is 11%, and the average gain 1 year out is 17%. Now, we just got this signal about a week or two ago. Okay, so this looks very, very promising. Okay, and the maximum gain in a 3-month period was 18%, in a 6-month period 29%, and in a 1-year period it was 42%. So this breadth thrust signal right here is very bullish for the market, and we've already seen the market really react very well to it, and has already started a pretty bullish rally since the time of this breadth thrust. Now, U.S. households, when you take a look at the selected assets and net worth, okay, the first thing I want you guys to look at this chart is it's starting in the lower left and heading to the upper right. Okay, this is a very bullish chart right here. This is something that has really been driving and a big factor in the stock market performance. And when you look at U.S. households net worth, okay, it's continuing to rise, right? And this looks extremely bullish, right? If this was a stock, this is something that you would have wished you would have owned. So while it may always it may always seem like doom and gloom somewhere, and there's always a doomer, there's always a bear, really trying to scare you about everything. And there's nothing wrong with really being aware of some of the risks of the market and, aware of what can go wrong. But there's a lot that's going right. Okay. And, if you're trying to be an investor, a lot of this data that I'm going over right here is just cold hard facts, right? So it kind of eliminates the noise of what this person says and what this person says, and it's really just, what do the numbers say, right? What do the numbers say when this happens and this happens, and what are the results? And that's the type of data that I really like to use the best. Now, investor sentiment got so bad that it was bullish in late October, and it isn't signaling caution yet again. So there were many signals, and we actually went over them in October, going over market breadth instruments, credit spreads, and different things like that. Okay, showing that, hey, we're seeing a positive divergence right here. We're actually seeing buy signals and how bearish things are getting. All right, and they're hitting extreme bearish levels, extreme fear levels. These are good opportunities historically to potentially go long in the market, and it ended up turning out to be a really, really great opportunity. Now, that's it for the data. Let's get into the video now and talk about TLT. Okay, so for TLT, we've pretty much just gone straight up almost, right? Not literally straight up. There have been, small pullbacks in between here. But really, since the October bottom in TLT, this thing has just absolutely skyrocketed and trading very, very bullish. Now, we are getting a little overbought here, okay? But just because something's overbought does not mean it can't go higher. Okay, that's a very common misconception, but it does just is a general rule of thumb is, you're typically not looking to buy something when it's overbought, and you're typically not looking to short something when it's oversold, right? So it's more of just a general guideline, not of something to live or die by. What I really like to do is I like to look for divergences, right? Now, I keep mentioning these divergences. If you're not familiar with those, take a look how TLT made a low here, and then a lower low here, and then a lower low here. But on the RSI, we made a low, higher low, and then a higher low. So here we're making a higher lows while the TLT is making lower lows. This is a bullish divergence, a positive divergence. It's an indicator that we could see potential bullish activity, right? And sure enough, that really kicked off the rally from a technical standpoint. And then a lot of the fundamentals behind it, really kicked in as well. And we've just continued to see this rally. Now, this rally is a combination of many things. Okay. Back in this time period over here, we were seeing record amount of short positions in the bond market, right? And there's no denying that, right? It was just pure cold hard facts. And then we were, missing out from having the biggest buyers of the bond market, right? And those being China, Japan, and the US, and the Fed, right? I mean, because the Fed is no longer doing quantitative tightening. They're doing quantitative tightening versus quantitative easing. And so now that the Fed has basically signaled that they're done raising rates, okay, not necessarily that they're cutting rates or about to start cutting rates very soon, the narrative is really changing in the bond market, okay? And this is going to affect equities and other things. It's very possible that this uptrend can be violent and continue for a while. I mean, if we look at how violent the uptrend was in the 10-year Treasury yield, we can see in this period here before April, really all the way up to October, November, to the end of October, I mean, it pretty much just went up in a straight line, right? I mean, not necessarily a straight line, but obviously you can see the bullish channels that it was trading in, right? It was just trading in these bullish channels for an extended period of time. And it's very possible many of the gains that we saw in the 10-year Treasury yield may slowly be undone and unwinded, and we could see a very similar type of structure here where we just have a consistent downtrend. Now, that's not my prediction, but that's something that I really wouldn't be surprised if it happens. Okay, now you do want to be a little bit cautious. As we mentioned, we are at those overbought levels, but we're not really seeing any signs of weakness or a change in trend at the moment. We're continuously making higher highs, right? Highs, higher highs, higher highs, higher highs. If we were to pull back and put in a higher low, that would be perfectly healthy. So a pullback is not the end of the world for TLT and does not mean that it can't continue its uptrend. Okay. Now to the upside, 101.55 is really the next target. We've got our 200-day SMA still downward facing, right? Going down. But if you notice, it's starting to flatten out. That's also a pretty good sign right here. Okay. And your 200-day moving average is going to be right around 98. Let's just call it right around 98. So that would be a potential first area of support is right around 98. Also at the top of this gap fill. Okay. So we've got 1, 2, 3, 4, 5 gaps down to fill on TLT. That's what all of the blue boxes are. Now remember, these gaps, they fill about 90% of the time historically. The big question is when. And when we came down to these levels down here, okay, we were filling a lot of previous gaps that took years and years and years to fill. So these gaps, they may fill sometime very soon, and maybe there's a sudden shift in inflation and inflation really starts to skyrocket. Then yeah, we can come down and fill all of these gaps potentially down to, $85. But for now, if the narrative is going to remain, current, right, with what it is right now, most likely we're going to continue to see this uptrend continue. And as I mentioned before, a healthy pullback for a higher low is well within bounds, to establish a continued, bullish momentum and a continued rally extended up forward. Now, we're basically right in between 101.55 and 97.03. This is going to be our next really range that we're in. We're basically right in the middle of that range where we closed right here. And so, to the upside, 101.55 is going to be my next bullish price target. And then 97.03, which is also the bottom of this gap here, is going to be my support. Okay. And so, this could be a potential range where you're looking to trade, within this range here at the moment. And, if we flip 97.03 to resistance from support, Okay, 94.74 is going to be the next downside target, aka level of support, which also is the bottom of the gap fill here for the next gap down. Now I have these levels here. These are the three most common and well-respected Fibonacci retracement levels. And if you take your swing low and connect it to your swing high, all of this is healthy retracement territory to potentially continue going higher. So I really just kind of want to emphasize that too, emphasize that through to people, is that like TLT could even drop $10 from here at $99 and head to $89, and it's still well within bounds of, bullish retracement to the 61.8% retracement level to potentially continue that uptrend. So, I wouldn't be surprised if things start to cool off a little bit. I think that some healthy consolidation here would be the most bullish outlook, and you would look for bull flag consolidation basically throughout this period here, and look to trade a breakout of the bull flag with the first target up there at that 101.55. And we went over the major support levels to the downside that you really want to pay attention to. Now, remember the inverse relationship between bonds and yields. So as TLT goes up, it means that TNX is going down. And if TNX goes up, this most likely means that TLT is going down. And so we established already that we've broken the strong uptrend, okay? But if you notice, TNX has a gap up to fill, and it has another gap up to fill. So, being that TNX is oversold, TLT is overbought, I mean, it wouldn't be the end of the world, and it would make a lot of sense if we started to see a little bit of a bounce in TNX, okay? And 4.128, which was right here, and 4.187, that's going to be your overhead levels that I'm paying attention to right now on the TNX. And we talked about this right here, 3.93. That's really the support level here. And, that was kind of one of the last targets that we're looking at. That's the 61.8% retracement of its recent rally up here. And so if we were to break through this, then the odds greatly increase of a 100% retracement if we're able to flip 3.93 basically to resistance from support on TNX. That's going to be a pretty bullish signal for TLT. So, you don't have to rush into anything over the next week. If you miss those parabolic moves, there will be opportunities, and let them present themselves to you rather than forcing them and forcing a trade. Now, the SPY is basically at my wave 5 target. All right. If you take a look from the October lows, we have a 1 up, 2 down. Wave 3 is your most explosive. And then here was our wave 4. Okay. And you can see we came right down to that 61.8% retracement level, which again, a lot of people were seeing this as panicking, right? So we hit these highs up here in the 460s, and then we dropped 50 points basically, right? We dropped 50 points. People thought the bull market rally was over, but really that was a very healthy retracement to the 61.8. We went long over here, definitely sold the SPY contracts a little bit too early. It would be amazing if I had them still right now, but our goal is to not be a perfect trader, but just to take advantage of the opportunities that are in front of us. And we did take advantage of that buy opportunity here, and we were able to find many other plays along the way that were very successful. So right now, if we continue heading upwards, 475.38 is my bullish price target. We came just short of that. And then 462 was that area that I told you guys that we're going to melt up to from this point over here. And the reason being is I showed you guys the data that historically, whenever 90% of all stocks in the U.S. stock market are green or positive in one day, the average return 1 month out is 3%. Okay. And so 3% from here would put us at 462. And you can see we slowly grinded up to that area one day early. And then the day after, we really just started exploding to the upside. So, we've seen some tremendous moves in the market. Okay. It can be a little bit tough to navigate, but hopefully this video really goes and shows you guys, how to weed out some of the noise and the data that you want to look at. Right. And so we looked at a lot of the data that drove this rally. And then we also looked at a lot of important data for how 2024 can turn out. So if you enjoyed this video, you're going to want to subscribe to the channel, because I'm going to keep you guys updated with data that's going to be relevant to, a little bit of the shorter term performance of the market, and then also show you guys that extended data that goes over, 6, 9, 12 months out in time on potentially what we can be looking for in the future. All right. Now, you can always sign up for my Ko-Fi page using the link in the description. That's where I book all of my coaching sessions and one-on-one sessions. You just click on the commissions tab here, and you can book a 30-minute or a 1-hour session directly with me there. Okay. You can also sign up for that free newsletter, guys, the investment intelligence newsletter, getting free trade ideas directly to your inbox. I try to focus on quality over quantity. So each of these typically will have, 1 or 2 trade ideas in them a week versus me spamming you guys in your inbox with 5 to 10 different stocks, different trade ideas, and then bragging about 1 or 2 of them at hit. These are literally the last 3 newsletters that I sent out, and all 3 worked out very, very well. So if you're fans of free valuable content and free trade ideas, you'll really love that newsletter. And if you want to sign up for the Discord, it's very, very affordable. It's only $10 a month. That's less than a cup of coffee a week. So I'm not charging outrageous fees. And in there, you get access to all of my custom scripts and indicators that I have. I've also started adding some of the scans that I have in there, so you guys can really just copy and paste this stuff into your Thinkorswim, and you'll be able to start getting instant access to those and using those immediately on top of the different analysis, the different stocks and trade ideas that I'm looking at. You'll also have access to all of those. Thank you all for watching, and I'll see you in the next one.